Meet tonight's special guest, John M. Templeton. John, welcome. So delighted to see you again.
Thank you, Louis.
Congratulations on your induction.
I'm so pleased and also surprised to be on the Louis Rukeyser Hall of Fame.
Well, you've always been there. John Templeton remarked the other day with characteristic modesty, "I am no wiser than I was 20 years ago, just better known." What's absolutely unarguable is that viewers of this 20-year-old program are a lot wiser today from having listened to Mr. Templeton over the years. He is, after all, the fellow who virtually invented global investing. A $10,000 investment in his Templeton Growth Fund when it began in 1954 would have been worth more than $1.2 million at the end of last year. Tonight, Mr. Templeton sets another record as he makes his 10th appearance as my guest on this program. John, the world that is your financial oyster has changed dramatically in the past year. What is the significance to investors of those changes in Eastern Europe?
It's just wonderful, Louis. Surely 1989 will go down in history as one of the great turning points. It was not only the time when these captive nations became free, a great boon to the poor people of those nations. Also, it will bring prosperity to the surrounding nations and prosperity to the world. But much beyond that, it will bring a feeling of brotherhood, a feeling of release from the tremendous danger of communism and the danger of nuclear war. This will have a profound effect and should be very optimistic for share prices.
You're suggesting it'll be good for all share prices. Is it something that provides specific opportunities in Eastern Europe before we get back to our own market?
Yes. Of course, you can't invest in those nations directly. You can only invest in the corporations nearby who will work with those nations, such as the German companies. But already the German market in terms of U.S. dollars is up over 50% in the last year. So it's probably too late to rush in and buy the German stocks today. The chances are that the profits won't show up for some years, so you will have plenty of time to get in.
It's typical of you to focus on valuation. For several years, people have been chiding you for having gotten out of Japan too soon. Maybe they're not saying it quite so loudly this year with the Japanese market off. Is the Japanese market still overpriced in your judgment?
Yes, Louis. We estimate that the market would have to go 50% lower than it is now before we begin to find bargains in Japan. When we began to buy there 25 years ago, our average cost for the best Japanese company was only 3 times earnings. But even today, with the collapse that's occurred in the last 3 months, they're still selling for around 44 times earnings.
Where are you finding bargains today?
Where people are selling. You never get a bargain except when most investors are trying to sell. Take New Zealand as an example. When the Labour Party won control of New Zealand about 5 years ago, it was followed by a very severe depression, with earnings down. Share prices in New Zealand now are less than half what they were at the peak. And yet the long-term outlook for it is an excellent nation. It's the same size as Japan, more natural resources, equally intelligent people. But you can buy shares there at a depressed price. One more is Hong Kong. Because of what happened in mainland China, the Hong Kong market last year went down 40% in just 1 month. But in our opinion, that's purely temporary. It's true that there's uncertainty when they become part of mainland China in 1997, but there's also potential. It could become the commercial and financial center for 1.1 billion people, just like New York is the commercial and financial center for 250 million. So the potential for the corporations and the business people of Hong Kong is excellent, and yet you can buy those shares at 1/4 the price of what similar companies cost in Japan.
A number of viewers have recalled your comment on this program 8 years ago that seemed so strange with the Dow around 800 that you thought there was a 50-50 chance that it would end the decade at 3,000. We've come pretty close to that. What do you think the 1990s will bring?
Well, you're kind there. I said there was a 50-50 chance that by the end of the decade it would go above 3,000, and it got to 2,800, but we missed the mark. It was not 3,000. But now we will say...
Some of the pedants in the audience say that the decade doesn't end till the end of this year, so they'll give you another few months.
Thank you. But now we will say that the chances are better than even now, that by the end of the new decade, the Dow would be twice as high as it had ever been before. In fact, we would say better than even chance that the Dow will be above 6,000 sometime in this decade.
When you were last here, you had an extraordinary percentage of your assets in the U.S. What's the percentage today?
Almost as high. We're still heavily overweighted in America, but not as high as before. We don't decide ever which nation to put our money in. We decide where is their stock selling at the lowest possible price in relation to our estimate of its value. And we found more than normal in America, especially in emerging growth stocks.
Well, that's the third time tonight we've heard that group mentioned. It's been a coming attraction for so many years now that some people think it will never come. Where do you find the value?
Any number. There's literally hundreds of emerging growth stocks in America. There are 4,000 new corporations formed every business day, and America is the leading nation for entrepreneurship. It's the only nation where the number of jobs has tripled in just the last 50 years. And now corporations that, for example, like First Investment Management, or let's say Robert Half, the great supplier of accountants at Temporary Health, is selling for only about 8 times earnings, and yet growing 20-25% a year.
We'll never run out of the need for accountants. If you could find a supply of lawyers, we'd be in the tips forever. Let's turn now to our panel, starting with Frank Cappiello.
John, one of your favorite investments, at least in the United States, is in your business, the mutual fund management business. In your accounts, you have Franklin, and you have a number of other large mutual fund management companies. What do you find fascinating about these, and do you think they're good buys for our viewers right now?
Yes, Frank, they're very good buys. It's surprising that it's not now regarded as a growth industry. In the last 50 years, the amount of money Americans have in mutual funds has increased 1,000-fold. And it's still in its early stages because Americans are beginning to realize that investing is so difficult and complicated that they need professionals to help them. And the mutual funds are the most convenient way to do that. So we do think that there are about 12 good mutual fund management companies in America, about 6 in Canada, and about 12 in England, and all of them are good bargains today.
John, there are a number of companies out there where there are a lot of sellers right now, and these are the companies where there's been excess leverage incurred over the last 10 years. And I'm wondering if you see an evolving opportunity in some of these companies that have excess junk bonds, or if you see some possibility for investing in bankruptcies looking at over the next couple of years.
There will be opportunities, but in our opinion, it's too soon. We have not had a recession now for over 7 years, and eventually there will be a recession. When you do have a recession, then that's a happy hunting ground for those companies that went through bankruptcy or companies that are highly leveraged. It's an excellent thing, but let's wait a year or two.
John, your remark about the Japanese market would have to drop 50% before it got interesting to you. Do you think that would happen? And even if it came close, what would that do to the Japanese real estate market, where the Imperial Palace is apparently more valuable than Manhattan Island with Jersey City thrown in?
It's probably the most exciting thing in the financial field today is how in the world can prices be reconciled with the rest of the world. For example, the Long-Term Credit Bank of Japan says that the land values in Japan are 5 times as great as all the land values in America, even though the nation is smaller than the state of Montana. Also, a single acre well located in the center of Tokyo is worth over $1,000 million. Those prices will eventually have to come down, including share prices. But we do not think they'll come down suddenly. We do not think that this decline for the last 3 months will last much longer because of controls. More than any other nation, they've tried to control their share prices in a dozen different ways, and so far have been successful.
John, we have one dissenter in the audience who's written me saying, I dare you to ask this question. He's obviously asking the wrong guy. He says, the Templeton Global Fund, formerly Global 2, has produced an anemic total annual return of only about 5.5% over the past 5 years. While we do not want to offend the guru, he says, it could perhaps be said we would have done as well by placing our money in a passbook account. What's your comment?
That fund is specialized in emerging growth stocks, especially the very small ones, with capitalization below $200 million. And since July of 1983, that has not been a favorable category. Sometimes you have to pay a premium of 100% to buy that type of stock, but now you can buy them at no premium above the non-growth companies. So it is in a position now where it may turn out to be the best performer in the future years.
Another personal question. I mentioned that Peter Lynch, who's just 46 years old, announced his retirement from his fund this week. You're a couple of months past that. What's going to happen to the Templeton Group when you're no longer actively managing it?
Well, now that I'm approaching middle age at 77,
but very slowly, of course.
I have no intention of retiring, Louis. God gave every one of us some talents, not the same talents or the same quantity of talents, but some talents, and therefore I think he expects us to use them as long as he allows. So I intend to continue to help people with investments.
Thanks very much, John Templeton. We look forward to at least 10 or 20 more appearances on this program. Thanks to our panel, and I hope you'll be back with us again next week. And if you think that timing is